There are three people, there are three entities that are messing with your money at any given time. And my goal is to make your money unmessable. So one of the entities or groups that is constantly messing with your money is what I call the big box advisors. And big box, boutique, independent. Look, if they have more than 5 ticker symbols in your account or more than 2 mutual funds, they are conventional, and I call them big box. So they're messing with your money. The second group of people that mess with your money is the $1 billion pick of the month newsletter industry, right? This is the group where you sign up for a newsletter for whatever it is, $99 a year, and they give you a new pick. But they also give you free picks, and you also do promos, so you're getting hit with all these picks. But if it was just the pick that you're paying for, you still end up with 2 or 3 dozen ticker symbols a year, with an extra one getting added at least once a month, and sometimes more than that. And no one ever subscribes to just one newsletter. It's usually like 3 to 5 newsletters. So that's the second group that messes with your money. And then the third group that messes with your money is yourself. And this is perhaps the most painful group. But in order to have a future of certainty and clarity and not having your money be manipulated and messed with or screwed around with, or really what I consider messed with, really to make your money unmessable, you really have to understand how all those 3 groups mess with your money. Now, what I want to do is I just want to talk about one of the groups, which is we're going to talk about just yourself. And in many ways, it's the most dangerous group that messes with you because you don't see it and you don't think you're messing with yourself and you can't see your blind spots, right? Even if you've been driving for 30 or 40 or 50 years, your entire life, you still have a blind spot, right? There's still parts of when you're driving that are outside of your view that you can't see, right? We always have blind spots. And so I want to talk about one of the major blind spots of humans when they invest. And it doesn't matter whether you are being messed around with from your big box advisor or the $1 billion pick a month newsletter, okay? But it's this one way we mess with ourselves that is really dangerous. And I want to talk about it. I want to talk about it with you. Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme is how to be unmessable, really, with your money. And I want to talk about it specifically by looking at 2 price charts. Both of them have to do with West Texas Intermediate crude. Most people would just think of it as oil, but there's about 65 different types of oil that is traded and used and consumed around the planet. The 2 most well-known is the West Texas Intermediate crude, and the other is Brent crude. But we're just going to look at the West Texas. So I want to look at these 2 and talk about this one way that we mess with ourselves. So on the first price chart, I just want to show you the energy sector, right? There are 11 major sectors that make up the S&P 500. The energy sector is one of them. And this is a tracking ETF, XLE. And I just put a black vertical line in for about where XLE peaked. It actually peaked a little bit after the vertical black line. And I put in 2 trending lines, a top trending line and a bottom trending line, just to give your brain a visualization of how XLE has been trending. And even though it was below this bottom trend line, each time it bumped up against it, it bounced off it. So this trend line has significance. And then once it got above it, it stayed in it. And then if it breaks below it, that would be significant. And it is breaking below it now. Since about this vertical line, it's fallen about 8%-ish. I'm being general here. Okay, so it's fallen about 8%, and it's fallen out of this channel. Now, this is just a channel that has not been around for 3 years or 30 years, but it's a channel that has been going up, okay? And let's just say it started right over in, say, December of last year, of 2 years ago. So we've got a channel that's about 14 months, okay? Now, here's the thing I want to talk to you about. I don't know which direction XLE is going to go tomorrow. All I know is over the last 14 months, it's trended up. Before that, the previous 2 years, it fell very, very hard, okay? Here's the point. If I look at energy itself, well, here's one of the points. If I look at energy itself, and this is a price chart of West Texas Intermediate crude, I've got the horizontal line at about $51. And the reason I put it at 51 is because it looks like when it's below 51, it wants to stay. And when it gets above 51, it wants to stay. You can see a lot of movement, bounced off here, bounced off here, bounced off here. Didn't quite make it to 51, but turned around, bounced off here, broke above, and is staying above. Then we have this vertical line, and West Texas Intermediate Crude has gone up about 8% since that black line. So we've got the energy part, we've got the commodity part that has gone up about 8% since that vertical black line has been put in. But then we have the sector, which has fallen about 8%. So we've got this divergence going on. And not that stocks have to go in line with the underlying commodity, but typically the stock itself leads the direction, right? So typically what you'd see is XLE move higher before oil moves higher, and XLE move lower before oil moves lower. Now, though that's something good to know, that's not my main point on this podcast with you. I have this belief that if oil goes higher, all those horizontal drilling companies and fracking companies all over the United States, they see energy go higher and they say, hey, we've got dozens or hundreds of wells ready to go. We're just going to bring in a rig and turn it on. And there are, I'm out of my league here a little bit, there's definitely dozens and dozens and dozens and dozens and dozens and dozens of wells that are ready to go. And all that needs to happen is a rig needs to come and hook up and start pumping out oil. And our country has a tremendous amount of oil that horizontal drilling and fracking can get to. And so I have this belief that, man, if oil goes higher, we're just going to turn on the spigot. And we have enough spigots that we can turn on that's going to move oil down. But oil's not moving down. And so what's interesting to me and how we hurt ourselves by messing with ourselves is we have this belief. And if the price chart doesn't align with your belief, then you've got to understand that you have to update your belief. So I have this belief that energy should not go higher. I have this belief because if it does go higher, all those US-based companies that have all those wells ready to go, they're just going to go turn them on and we can flood the market because it's not illegal anymore to export oil from this country, which it used to be illegal to export oil. It's not. So we have all this excess capacity in this country that we can start selling our oil to the world. And intermediate crude oil is very high quality oil. So it's going to be interesting to see what happens that if oil continues higher, then that means there must be something I'm not seeing or understanding with the oil market or with the world economy, right? Maybe there is this thing called inflation going on and it's not just reflation, right? Because I will then have to adjust my belief system to align it with what's actually happening in the market. And that's the key point I really want you to get, that we have these beliefs, but you always have to make sure you're updating them to what's actually happening in the market. And I just wanted to show you that with West Texas Intermediate Crude because I have this belief. It's not fixed in stone. It's something that I will have to continue to update as the price changes on both the underlying commodity and the commodity. Now, the commodity is more in line, the actual stocks, the publicly traded stocks are more in line with my belief that, yeah, profits are going to start going down because there's going to be more and more oil out there. But heck, oil hasn't moved really that much, and it's, I guess, stubbornly staying above 51. So what's the takeaway? So guys, knowing is a mirage. We don't really know. What you know or what I know or what I believe to be true or what you believe to be true, we have to continue to update it by looking at price charts, right? Is energy going higher? Well, it is right now. It's up about energy. Is West Texas Intermediate Crude going higher? Well, it is. It's slowing down. It looks like it's stuck below 55. Can it go higher? Emotionally, I'd say, how can it possibly go higher? There's no wars going on. We have excess capacity. All the world's oil producers are pumping as much oil as they can to pay for their deficit spending. But look, if oil does go higher, then I realize, wait a second, I have to adjust my belief. What am I not seeing? Because the tens of millions of people that have real money in the price of oil, in commodities and other ways of tracking and putting your money where your mouth is with oil, oil is going up. So you have to adjust with the actual price charts, right? You have to be ready to be surprised. You have to be ready to be wrong. You have to be ready to fill in the blank, right? You have to be ready to update your point of view. And the way you do this is by looking at the price charts and coming in with an idea of like, yeah, well, how can oil go higher if, all these wells are getting more rigs and they're coming online and we're at excess capacity. But hey, if oil continues higher, that's your point to go, not be self-righteous or angry or double down or go into some website or blog that's talking about peak oil so you can justify your belief. That's dangerous. That's self-righteousness. And that's really what's underlying that is fear, right? Because there's no fear and greed in the market. It drives me crazy when people talk about fear and greed. There's just fear and fear, meaning there's different types of fear, right? There's not one type of fear. There's a fear of losing money. That's a big fear. But there's also a fear of missing out. And it's these two fears that run opposite of each other. There is no greed. There's just fear of missing out or fear of losing money. And when you start to understand that, you start to understand everything with your money. And then your money starts to get aligned with the market. And that means you are no longer being woken up at 3 o'clock in the morning because you're worried about the next shoe to drop. You're no longer worried about, can I afford, is there enough? Because you have figured out how to align your money. Hey guys, this is just another step in helping you protect your portfolio and your future. Until next time, this is RC Peck.